Good morning. How is everyone today? Everyone well? Oh God, I didn't sleep well last night, so sorry, late start. Anyway, let's quickly have a look at Bitcoin. We're so close, sir. We're so close to the all-time high. Are we going to get there? That's the $1 million question. The $1 million question. Good morning, David. Welcome. Are we going to get to the all-time high? Well, we are actually into a weekly level. This is potentially, is that the last line of defense for the bears? No. That coincides with a daily level as well. I think I've marked them out. Let me have a look. No, I haven't marked it out because that weekly level and that daily level is on exactly the same place. So, oh gosh, pretty much the same place. What did I do? Yeah. So we're basically into a weekly and a daily level which coincide with the same line. This is basically the last resistance in the sand for the bears at the moment. We're into that last defense, the last line. I mean, I don't think it's going to go over just like that. Doesn't Bitcoin never usually does that. But let's have a look at some other things. The weekly candle, very strong bullish candle. We're already into a continuation, but it's only the beginning of the week, so you don't really know how this next week is going to end. And I think it's quite easy to see where one might want to short because you have this previous week high now. There, that previous high. And if we start getting a failed auction, then it'll be easy to see. So you see we came into that weekly level and clearly that's showing us a little bit of resistance right now. And what happened yesterday was that I was contemplating a longer range and we're not necessarily out of the range. So let's just be clear about the range, okay? This looks like we've broken out of the range, but this could just be a deviation from the range. You just got to bear that in mind. We might still be in the range, even though it looks like we're outside of the range. I had a short planned yesterday. I took it and then I was stopped out, which is fine. My short that I had planned yesterday was this swing failure here. I took it very small and I was stopped out pretty much immediately, and that's fine because I came in very small because I wasn't sure. But I did take it. I took it because you take the short, you know, that's the trade. You trade the plan, you plan the trade, you trade the plan. It either works or it doesn't. I didn't take this short up here. That would have been a better trade because actually it did swing failure, but it would have been really hard to enter that short because this short up here happened so fast as the price went up. Happened so fast And what you can see is that whoever took that short, as the price moved down, if I zoom into the local time frame, as the price moved down, they immediately took profit. So actually, it was a very difficult short to be had, although it was anyone who would have entered late could have still managed to take a little bit of profit, but the price clearly turned. And as always, the reason why the price turned is because when you break a line, you get a back test, and that becomes your SR flip. So this previous high became the SR flip, and it tested once, potentially twice, and then the longs enter to take it up. Yeah, because when you want a long on support, and that became a resistance to support line. So my short failed, but it was a very small short, so I wasn't really too bothered about that. Let me just clean all this rubbish up, get all of this. It's all irrelevant now. Potentially that trend line is still relevant, and potentially this previous high is still relevant. I'm going to rename it to SR flip. I'm going to get rid of the alert though. No need for an alert now. Don't know how to get rid of that. Forget it. That's fine. So we have that one. We have this. What's that horizontal ray? Let's get rid of that. We have that weekly level up there. Let me have a look at the daily time frame candle. See what that looked like over the weekend. Nice candle actually, to be honest with you. Reverse that, closed higher. If you look at the analysis I did on the candle ranges, you see it closed back into the wick of the body, and then the price came back down into candle body top, and then just powered up. And you may not realize it, but these levels do play a role. So that's kind of the range we're in. We're above the range at the moment, and it'd be very easy to see us fall back into the range. Very easy to see. Actually, I will get rid of that SR flip line now. Even though it is still relevant, I'm gonna get rid of it. I drew this kind of line, and it did break yesterday. I was hoping it would go back down. That's why I was looking for a short, but I wanted the price to go down to the bottom of the range. It didn't do that, so that's fine. It just shows that there's quite a lot of bullishness, and actually there was bullish divergence on the CBD, so it is a little bit of a risk, but it was a very small risk. If I do a volume pool on this range, probably from here, somewhere here, to current price action, I think I have the previous volume data as well. Okay, so we can now see that the value area high has moved up a little bit. The point of control is still where it is, exactly where it is, and the value area low has moved down a little bit. So the range is actually, the volume range has expanded slightly. The point of control is still where it is. We're starting to put a little bit of volume up here, as you can see. A little bit of volume being put up here. But I can also see that there's been some volume gaps created on this push up. Yeah, volume gaps are created when there's no volume, zero volume. So the price slips up as the price goes up. People are market buying. There's no orders, and so the price jumps. It creates these gaps in the market, and usually the gaps fill. Eventually the gaps fill. The market doesn't like gaps in the price, so eventually the gaps always fill. It's not 100%, it's not always, but it's high probability that in the future, sometime in the future, most of the gaps that are formed as the price goes up, not just in this local range, but just throughout the whole course of the higher time frame, will fill in the future. We don't know when. Could be years, could be months, who knows. So I still think we're in the range. It's bizarre, but I don't necessarily think we've left the range. I don't know. It's clear that we're into resistance right now. The all-time high is not far above us. Good morning, War. He asked the question. Doge is up. Is it gonna hit 30 cents like we thought? All right, I'll have a look at Doge after this. So what I'm looking for now is a sign of weakness. That's what I'm looking for right now, okay? Why am I looking for a sign of weakness? Because we're in the highs, yeah? I'm not going to long the highs. There is a long to be had, okay? But I'm going to explain to you what the long is, and I'm going to explain to you what the short is, okay? I'm looking for a sign of weakness because we are in the highs. And when you're in the highs, the price can reverse and go back down to the lows, okay? If we are still in the range, and if this is a deviation from the range, then the easiest way to see the sign of weakness will be to lose this level, okay? Very simple. That is our SR flip. Okay, you can mark it off. It's this previous high here, which has been tested on the way up as resistance, hasn't been tested as support. So if we somehow lose this level, there's a short on the table right there. It might do something like that, or it might do something more like this. Okay, who knows how it's going to form, but what you can see clearly is that the price went up quite fast, and it's very possible that the price will come down very quickly if it was to drop. Okay, so there's a very easy short to be had right now. But you have to wait for the price to come back underneath this previous level. It's a very easy short. You could start with an invalidation above the high if you're not sure, but I probably wouldn't. I probably wouldn't do that. I probably would look for a much tighter invalidation, and you kind of don't want the price to fall back underneath this level. And go back up. You'd really want to be out of that trade if the price was to do that. If it was to go under, not find acceptance, get rejected, and go back up, you don't want to be in that short. You want to be out of that short very quickly, because the idea is that this line is now acting as a support and resistance line, and you want it to flip. So if the price does go underneath this line, you want it to hold as resistance, and so that would be a very easy short to be had, and your first take profit would clearly be the value area high of this previous range. It is more likely than not that if the price does go down, you're probably heading back into the value area, okay? But you still have to take profit. You have to take profit because for whatever reason the price could go down, find support, and ping back up. Yeah, you could always do that. If you don't take profit, you failed your trade for no reason, because that's a very viable short. This short is a 1 to 3 risk to reward. That's a very viable trade. If you lose this SR flip, you take that short with this kind of invalidation, you have to take profit. You've just done 3x on your risk, on your investment. Why would you not take profit? You have to take profit, okay? And then if the price continues, you have a runner and you can take profit at the point of control. That would potentially be your main target, okay? So there's a short idea here, I think. And until that happens, I don't think you would be looking for shorts. Potentially the other short, there is another short potential, and that would be a swing failure of these highs here if the price did go up and came back down. So there is another short slightly higher up. That's a little bit more risky because obviously if the price is going up, you could just go up. It could just go up. You have to be aware of that. So these are very risky trades, and I would always start with a very small position, very small, significantly less than 1%. And then if the trade starts going your way, you can start adding. As the price continues. Yeah, so I don't think I would take that. I'm just saying if someone is just, there is a short there to be had too, you know. If we are showing a little bit of bearish CVD, I'm going to show you in a second. So because we're showing a little bit of bearish CVD, there is a short higher up on the table. Okay, when it comes to longing, people are interested in longing. Well, if the price comes back down to this SR flip and holds the support, there's a long there too. Yeah, I wouldn't long the highs, but you know, if you start seeing some bullish divergences, you could long that SR flip if the price comes back down. But you are longing into resistance at the weekly level. You have to bear that in mind. So it's not a crazy, it's not an amazing trade, to be honest with you. The better trade would probably be to try and long a back test of that weekly level. So what you're looking for is you're looking for the price to get back above that weekly level, find support to go up. That's a reclaim of a higher time frame level. Okay, you have to be aware that there is a swing failure of these highs on the cards. That's short that I mentioned. So it's very possible. It's a very risky trade too. Longing in the highs is very risky too because of this potential swing failure of the highs. If you long there on the back test of the weekly level and then a larger long from lower down closes their position on the swing failure at market, it'll just do that potentially. So that's also a risky trade, but that's kind of what you would, where you would long, because the idea is that you're longing on a reclaim of a resistance line into support. That's kind of like an SR flip. You could possibly long that, but if you see a swing failure, you have to close it immediately. Yeah, if you long and then you see a swing failure, you just have to close. You wouldn't wait to be invalidated. That is your invalidation potentially, but of course the price could go up, find support, swing failure, still continue to find support and continue to go up. So your initial invalidation was correct. Okay, it's Bitcoin is quite volatile like that, and you know, Bitcoin can do anything. And so the thing is, you have to have an invalidation, and these horizontal support and resistance lines and levels are very easy to see invalidations because the price likes to move around these horizontal lines in certain ways. I think the safest short is going to be down here, and potentially a long off this SR flip will be a much better long, because at least you're just another back test of this SR flip. Okay, and the reason why I say that is because I'm going to show you now. If I go to XO charts, which is the order flow, and then if I look at let me show you. If I look at this move that went up yesterday, we created some single prints. How can I see them? Is that the wrong one? That's the wrong one. Is that the right one? Nope, that's the wrong one. That's the wrong one. Which is the right chart? There it is. This is the 4 hour. Let me bring it to daily. Nope. Actually, I needed the 4 hour. So as the price moved up yesterday, this is where we're currently at. You see here it says SP. These are single prints. So this is zero volume on the move up. And actually there's two lines of single prints that were created. And these single prints are usually what they do is they act as support if the price comes back down to these levels. If I just quickly note it down, 58987. Let me just see what that looks like here. No, that's incorrect. That's much further down. Oh, wait. That's not correct. My bad. Was there any more? Okay, no, I think I made a mistake. Let me just go to the lower time frame. Buying tell. Was that it? There. Oh, it's much lower down. That's weird, isn't it? 5758. When was that? 20th of February. 1 hour. Buying tell. There it is. That's what I wanted to see. Here. I thought I was looking at it right. Here it is. Do you see that says SP? That's that zero volume that I was talking about. So the single prints are 64777. And so what I usually do is I'll mark those off. So I've got one just for single prints. 64777. And I usually what I do is I'll mark off both of them, the top to the bottom. So 64481. Okay. So there's a gap there. Do you see that gap? And that gap nicely lands at that SR flip that was confirmed as resistance, and we haven't back tested it as support. So actually that gives me a little bit of confidence to long, because if that single print does fill, the idea is that you get a reaction. Okay, so there is a long to be had here for sure. And then if you lose that gap, then there's a short to be had. I think that's probably going to be the best trade. The short there or the long back there. Okay, that's kind of what I'm thinking right now. Let me just get rid of these. I don't think I would long higher up. Let me just get rid of those. And I don't know if I would short. I might short. Possibly what I would think. The short here, possibly in my mind, would be this. You go up, you take the liquidity from the swing failure, you just come back down underneath this weekly level, and then you've also got a higher short, because you're then shorting a swing failure with the price coming back down underneath that weekly level. And so you've got a slightly wider invalidation, but at least you're shorting resistance, and that will be back down to the bottom of these single prints. That's kind of the idea. And then you'd have a short if you lose this SR flip too. So there's a couple of shorts potentially on the table. This one I would want to see the price come back underneath the weekly level, maybe even with a little bit of a back test, and then you could see you can have a nice short all the way down to this SR flip. A couple of shorts on the table, and then also a nice juicy long to take us right back up. Okay, so that's kind of what I'm imagining there. I do still think we're in the range. I do still think that it's possible that we just have a failed auction and the range continues. Yeah, I'm not in the mindset that we Dan, just quickly messaged me. Hi, Amir. TRVL is pumping. Right, let me just finish this then. Right, that's BTC. I don't really need to go into it any longer. These are the trades that I'm contemplating. We're probably going to see all-time high this week. Okay, let's go to TRVL. Oh shit! What the hell? Dan, did you just buy? God. Dan just bought. His fat fingers just pressed buy. Amazing, huh? Everyone is rich. Well, I'm glad to hear or see that in all of my analysis these last few months, 2.5 or 3 months, that I was on point, that I wasn't wrong. Because, you know, it's hard. I'm telling people TRVL is bullish. And for a long period of time, what was happening? The price was in the lows. It was down here, remember? I don't know if you're around. You know what? I was telling people the price is bullish here. I was telling people the price is bullish here. I was telling people the price is bullish here. We had this massive rejection, and I was still telling people the price was bullish. I was telling people the price was bullish here. I was telling people the price was bullish here. And look where the price is. Is it bullish? The funny thing about the funny thing about the conceptualization of bullishness is that people only think the price is bullish when the price is going up. Yeah, I think the price is bullish when support is holding. If support holds, that's bullish, and support has been holding. If you look at the whole price action, we've been making higher lows. Look at this: higher lows, higher lows, higher lows, higher lows, higher lows, higher lows, higher lows. That's bullish. You can't doubt that. When you keep on making higher lows, that's bullish. It just means there's so much demand that the price can't get back down to lower lows. We're making higher lows, okay? And potentially higher highs, potentially higher highs. Let's see if we can take out that high. Would I short? There's no shorts in TRVL. Would I sell 9 cents? Probably not. Probably not. Why would I not sell 9 cents? Okay, because we're just impulsing. We've just started. This is like wave one. I'm not gonna sell wave one. I'm gonna wait for the wave to finish, right? Wait for the wave to end. If this is the wave one, look. So this is potentially this is the wave one. It's the wave two. This is the wave 3 of 1, right? Potentially. Let's just say this is the wave 1. And I did say yesterday, I don't know if anyone remembers, let me go to my MEX chart. I don't know if anyone really pays attention to what I'm saying, or even has the time to watch my videos. But look at what I just drew yesterday, and look, I've just put it back up. Like I said, pretty much. I mean, obviously I got this part wrong, fine. But look at the triangle. I said we're in a bit of a triangle, and look, just what can I say? The other thing I said was that just trade the range, and I was expecting it to go down to go up, and it did. It went down to go up. So let's just get rid of that now. It's irrelevant. And let me do some things now. Let me do some magic, because people want magic, so I'm going to try and give you some magic. Not that I haven't been giving anyone any magic all this time, but I'm going to try and give you some more magic, because I like magic. We all like a little bit of magic. So this previous range is irrelevant now. I'm looking at a higher time frame fib time, okay? And for me, this is going to be very crucial in the next couple of weeks, because we're coming up to a very important fib time. Now, most people don't really know about fib time. Most people don't really understand fib time. Most people don't know how to use fib time. Okay? Even people who've been taught fib time don't know how to use fib time. With fib time, it's one of those things which you just have to keep on looking at and experiencing, and then you'll begin to understand how it works. In a gist, and this is, I've been looking at fib time on the weekly time frame, okay, and for all intents purposes I ignore all the other fib times. I only look at the 618s and the whole numbers, 1, 2, 3 onwards. Okay, doesn't mean you can't look at all the in-betweens, the 382s or the 786s or whatever. You can probably look at all of them, and they probably all potentially show some kind of relevance in the way the price moves. But effectively what I'm seeing is that in 2 weeks time we have a really major fib time. The way the price moves is that it moves in patterns, and those patterns are usually very symmetrical, and that's what fib time is. So if you look at this move from the beginning of the token launched all the way down to this pivot, that is a 1. Yeah, so I've imagined that to be the 1. And then what you can see is that at the 618, so when I say that's the 1, that's the 0, but it's the period is a 1. Okay, so it formed, that's where your 0 begins. And at the 618, which is here, we put in an all-time low. Okay, so the period here was a 1, which starts at 0. So that's the whole period of the way the price has moved. So from the launch to the first pivot high, that's your period. Okay, and then after that period is formed, which is your 1 period, you start from 0. And at the 618, you've put in an all-time low. And so we're coming up to another 1. And that 1 is going to be the same time period as this one here. Yeah? It's going to be 1. It's going to be the same. We're coming up to it. And so you can't trade these on their own, but they do act as really strong confluence when you hit significant points of interest. Okay, and I don't know if it's coincidental. I don't know. You know, the markets are very unusual the way they move. I don't think anyone's manipulating this. It's certainly not me. But if we are to come into resistance somewhere on a major fib time, that's confirmation. Yeah, you would expect us to come into a major pivot on a fib time. You would expect that, and that would be perfectly balanced with the way the price moves. Yeah, and that's why they're so powerful. They can be very powerful. Now, it's amazing that we're starting to pump now. I can't predict the future, but are we going to end up at the golden pocket on fib time? Here. If we do end up with a big candle right into the golden pocket on fib time, you're not going to buy, are you? That's where you would expect the pivot and the next pivot to be put in, wouldn't you? Yeah, that would make sense, because on the first period, we put in a major pivot. You see that? Okay, so just bear that in mind. Okay, then what you can also see is that the 1.618 lands in November 24. So potentially, if we were to, for the sake of argument, put in a major pivot somewhere higher up on fib time, which is coming very soon, you could get a nice long consolidation all the way to the next pivot. That we could put in another low there, just the same way we put in a low here for a 2 correction. It's very possible. Wouldn't know how far that would correct, wouldn't know how deep that would correct, but potentially that's kind of what I'm imagining. Okay, and then if we were to do that, then the next fib time, if let's say we were going to put in a low somewhere in November 24, that's at the end of this year. Okay, and don't forget, the low doesn't have to be down. This is a correction. Yeah, it could be, we could be looking, let's say we do go up to the golden pocket, we could form a zigzag. Yeah, we could form anything. The 2 correction here could be anything. It doesn't have to be just a straight down. It could be a straight down, but it could be anything. No one can predict the corrections. The most bullish corrections in my mind is some kind of flat correction. Wherever we land here, you kind of want a flat correction. Okay, that would be the best form of correction. People say deep corrections are bullish, but I actually think, personally, I think flat corrections are bullish, more bullish. Okay, I think long flat corrections are much more bullish than really deep corrections for the price to go up to find higher prices. And then you're thinking to yourself, well, look, we've just put in 2 major pivots. The highs are on the whole numbers. The lows are now, potentially one low is on the 618. You'd be thinking to yourself, maybe the next pivot low is going to be on the next 618. Maybe then you go up and put a high into the golden pocket now, which is roughly 30 cents. Then you're looking for some kind of correction. It could even be like a 5-wave correction. It could be anything really. For the next impulse, which would be the big one. The 3 is going to be the big impulse. And then if we were to put a major pivot now on the highs on this 1-to-1 on fib time, I honestly would be thinking that the next move would begin. I would really believe that. I'd really be thinking like that. Now, these are areas, these are ranges. They're not specifically one date or 1 week in mind. It could go a week earlier or a week later. It's just an area of interest of where you're expecting the price to try to put in a major pivot or a major low or a high. And then you would be thinking, maybe we're going to put in a pivot there somehow to impulse all the way up to April 25. Potentially. That's what I really would be thinking that. Go up, go up, go up, go up. To put in your next pivot would be your next 1-to-1. That would be sometime in April. Now, according to this, the next pivot would be December 25, and I think most people would agree with me that would be the end of the bull market. But the wave 5 doesn't have to be another expansive wave. If you have an expansive 3, you could end up with a correction for a wave 5 like that. You know, there's no reason why this would necessarily continue, because the wave 3 is the most expansive wave. The wave 5 could be after a drop, and then you just have a little wave 5 for the beginning of the bear market, and that would basically put the next pivot somewhere in December 25. All right, so I'm really actually thinking that there's something going on here, and I do know that there's a major pivot coming in the next couple of weeks, right? So just bear that in mind. You don't trade fib times on their own. You actually want fib time to come into into confluence with another major on the same time frame on the major pivot, okay, on the major level. And so looking at this right now, let me just hide fib time now for now. Let me just hide fib time. So we came into the weekly level that was historic. We're now just powering through. We've clearly broken this trend line. We've clearly broken this SR flip. And right now, anyone entering is just clearly, they're easily entering on support. Yeah. As the price moves away from the support, the invalidation becomes wider. But we are now, I think we're starting to see a bit of an impulsive move. That's what it looks like. Where did the impulse begin? Well, none of this was impulsive. All of this price action, none of it was impulsive. Potentially that was an impulse, huh? Potentially, thinking about it. And it's hard to see it in the moment, but you could potentially potentially we're in the wave 3 now. You know, it's not easy to see. Potentially that was quite impulsive and all of this was corrective. This wasn't the impulse. And the reason why this wasn't the impulse, as I've said before, was because the price came here. It came back underneath this high. That doesn't work when it comes to Elliott waves. So that resets the count. If that was the wave 1, and then this was the wave 3, then the correction can't come underneath the top of the wave 1, and it did. So that resets the whole Elliott wave count. Okay. So now we still had a bit of an impulse here. From here to here. That was quite impulsive. It was a very short impulse, but it was impulsive. Could this whole thing here have be our correction for that wave 1 impulse? Could that be the wave 1? Yeah, it could. It definitely could. So let me have a look at that with that idea in mind. It's quite impulsive. It's an impulse. If that's the end of the wave 2, if this whole thing was the wave 2 and that we had a really shoddy wave 1, yeah, it's looking quite good. We're potentially in a wave 3 right now. Potentially. Okay, this is what I'm thinking. So if this is our wave 1, and just remember this is very subjective, yeah. As price action continues, you look back and you have to reanalyze. You know, I mean, I'm just looking at this based on what I'm seeing, but you know, things can change, and you just have to update your analysis as new data comes in. Oh, what's that? Sorry, didn't mean to do that. So let me just quickly just show you what I'm thinking right now. Potentially that was our wave 1 there. Very hard to see but no one really expected that to be the wave 1. But look, the reason why I'm thinking it could have been the wave 1 is because we didn't take out the low here. We made a higher low. And so that would be the invalidation of this Elliott wave. If we made a lower low here and took out that low, that resets the Elliott wave count, but we didn't do that. So it held. The low held, And potentially all of this is just a corrective move, but the low held. Yeah, we didn't go underneath that initial impulse. So what I'm possibly thinking is that was our wave one up to there. This whole thing is some kind of really complicated correction. And that's off. That's this. This is the wave three. We've already done a one. Now we're in the three. And then we'll have a five. That'll be the five of three. All right. That's kind of what I'm thinking right now. Let's see how far this goes. So if you have a 3 that goes up to there, you have a 4, it can't come underneath the top of the 1. That's the rule. Yeah? That's the rule. That's how Elliott waves work. So if that's our 1, as we power through it now on our 3, the top of the 1, which is at thereabouts 9 cents, becomes our SR flip for the 4. The 4 can come all the way back to the top of the 1, but it can't come underneath. That would invalidate that idea completely, because that's not how it works. The 4 comes in and it can't come underneath the 1 if that's the 1. If it comes underneath, then that wasn't the 1. Does that make sense? You don't really know. I'm just saying this is how it is looking right now. If we do a 3 and then the 4 comes down, then we just have to redo this, because then we're saying, well, that doesn't work, because it's the same thing that happened here. Initially, I was thinking that this was the 1 and all of this was the 2, and maybe that was the 3, but that invalidated because we came back under what I thought could have been the 1. That being the 1, that invalidated that idea. And now I wasn't contemplating that this was the 1, but now just looking at the price action, I'm thinking to myself, actually, maybe that was the 1 again. Maybe that was the first impulse and this was the correction. Again, I could be wrong, because if the price does do this and the 4 again comes back underneath, then maybe you have to reevaluate and think to yourself, well, actually, maybe this impulse is the 1. And it's like a repeating record. But until it's invalidated, I'm thinking to myself, that was the 1. This was the correction. Very complicated correction. A, B, C, A, B, C, A, B, C. I don't know. Who knows? It's like some really long, drawn, complicated correction. Very bullish. If that's the correction, it's a very bullish correction, because it's a very long, drawn out correction, and it's a very flat correction as well, which is what I said. These long, flat corrections are extremely bullish corrections. So if that was the 1 and this was the correction, this is a very bullish too. Yeah. And so what you would do is you do a trend-based fib. If you want to replicate this on your own charts, let me just kind of get rid of this EW now. Just take this trend-based fib tool. Let me get rid of that weekly level now, because it's not relevant. Good morning, B. Welcome. So I've still got my higher time frame fib levels. I'm not removing those because I like to see where my higher time frame is. Why have I got 2? Get rid of 1. So let me just clean your data on your charts. Clean your charts a little bit. So the only data that I've got here now is where's my data? Where's my charts? Why is it not drawing? Oh, there it is. So the only thing that I've got right now on my chart is this higher time fib. Okay, and I'm using the log chart just so that everyone is aware. So now I'm thinking to myself, this is the one. And again, all of this is subjective, anything changes. I'm using this tool, the trend-based fib extension. Take it from the beginning. Where did it end? Well, let's take it to the high. And then take it to the beginning of this next impulse. Okay, so 1, 2, 3. Okay, that's what I'm thinking right now. So if we're in the 3 now, and it's starting to look very impulsive, and the fact that we've broken two major support lines is exactly what you want to see. You want to see it with volume though. So I want more volume, like honestly, I really do, but I don't control that. Then I am thinking to myself, it would make sense if this is the 3, that 9 cents isn't going to hold. That being said, at around 10 cents, there is a major fib line, which is the 382. And there is also this 786 on this fib extension. They line up quite nicely. So that kind of makes me think this trend-based fib is correct because there's nice line alignment. But actually, potentially, I'm thinking to myself, that's where we go. Somewhere here. I'm thinking that's probably our target for this expansion to make the 3. Nice impulsive 3 into that TR pocket. And that would roughly be, it'd be above the 50%, but it'll be coming in nicely into like 18 cents to 21 cents. Like, I think it'll be nice if the price can expand into that area. And to be honest with you, I think it would also be nice if we get another 4. I don't know how the 4 is going to look. Now the 4, if it corrects, you just don't want it to come down underneath 9 cents. Well, this is 8.8, but... And then probably to the golden pocket. That's what I would love to see. That would be really nice, but you can't predict that. And actually this whole 3, and this is the thing, we have to see how impulsive this is. Does the price don't reject here at about 20 cents? Or can the price get to the golden pocket? Ideally, you want it to see if this is the 3 that we're experiencing now. Remember, we're still looking at the wave 1 of the higher time frame. So this is the 3 of 1. You really want to get into the golden pocket. And the reason why you want to end up in the golden pocket, because it's all about clearing liquidity. I want to see as much liquidity cleared in this first run as possible, because it will make the third wave easier to impulse. That's all. Okay. So at the moment, I'm just thinking to myself, what if we do get to this 1.618 in this move now? That would land us kind of in the golden pocket. Like, look, 26 cents, 29 cents. We just need a little bit of volume now. And actually, if we get past the 1-to-1, just past it, we're making a higher high on the weekly time frame here. See that? And then we've basically potentially changing weekly market structure, because that will be our higher high. And I would like to see it impulse even further. Okay, I can't predict that. That being said, there are some things to note. Let me explain. This move down was extremely aggressive. You see that? It's quite an aggressive move. So usually when the price comes back to that part of the move, which is above this one, it'll be the same. Usually it would be exactly the same. Okay, it's only when you get like these long consolidation areas, like look, all of this was a long downward. It was very hard to get back up through that area when you kind of match it, because there's a lot of trapped liquidity in this area. But because this move was quite aggressively sold off, there isn't really much resistance created. Okay, there isn't really much resistance created. And if I'm looking at this, these candles that are formed, I can clearly see that the liquidity has been taken from this daily level, this daily level. The liquidity has been taken, yeah? So all of these daily levels have had their liquidity taken. So even though there might be trapped liquidity, and the only trapped liquidity that I can potentially see is in this red candle here on MEX, and it's going to be, that's going to be the candle that shows us a little bit of resistance, basically above where this wick is here, and all the way through to the top of the candle. That starts at about 23 cents. Okay. Slightly higher than it. That's where you're going to start getting a little bit of resistance. And then also, if you look at gate, you can kind of see the same area of liquidity. So you see that's red volume, this high red volume here on this red candle. That's where there's some trapped liquidity that hasn't been cleared yet on this candle. And all of these other levels have been cleared. All of these levels have been cleared. There's no liquidity there really. It's just above this wick here. It's about 23 cents. So we have trapped liquidity from 23 cents through all the way to the top actually, but this is the key level here, this 33 cents mark. So from 23 cents to 33 cents, I do expect the price to find resistance, and no one can predict exactly where it's going to find resistance. So let me go back to the MEX chart, which is the one that I'm using. Let's see where that lies. And I'm going to create a little zone. I think we got a little bit of trap liquidity there. Okay. That's just going to be volume that has always been negative from 2 years ago. And as soon as the price comes back into that those previous levels, you're gonna get people looking to exit at break even. Okay. And so there's going to be natural sell pressure, because what happened was that as the price came down, people were buying. You can see the volume level there, and the price just dropped, and they were trapped, and so they were in negative positions. And for a lot of these people, maybe they're still buying, and then that will be their first chance to exit at break even when the price comes back into those original levels. Or maybe they haven't bought and they've just set limit orders or sell orders at those areas, so that when the price does eventually come back into those prices, they're just going to exit at break even, and they haven't made a loss. You know, they've just made a really bad trade potentially. But let me tell you something. That's still pretty good, if we can get up to 23 cents. But I mean, look, we have got resistance levels above us, and we have to see how the price reacts as we come into those levels. We have a little consolidation range here. Let me have a look at it. So there's going to be some trap liquidity here too. See that? And this wick that came up got as far as here. So what I can do here also is do a little volume pull on this little range here. You see how the price, when it came up in this candle, it came right into the point of control here. That's where most of the volume was in this range. And we do also have a daily level. See that? There's a daily level there too. And there's a daily level there too. So potentially we're going to find resistance now at about 10 cents, okay? Now, this is the key. We have to see how the price reacts. Like, there is resistance, there is some liquidity, but this is looking pretty bullish. Do people FOMO? And no one can predict how people are going to behave or react. Do people sell? Because if this is an impulsive move, people are going to be less inclined to sell. They're going to want the price to impulse. Yeah, it's very different to before, because what we're seeing now on the daily time frame is two nice green candles followed by a red and then an impulse out of that. We haven't really seen that in the whole of this price range. Potentially the last time we saw that was here in the all-time low. See that? Two green candles, a little red one. Then it was followed by three green candles on the daily time frame. A little kind of flat correction with a red candle and then another impulse. Okay, so potentially you could kind of, looking at this local price move, and if this is the if this is the wave 3, you can also think to yourself, well, if it's a wave 3, it still have 5 waves as well. So each bullish impulsive wave also has 5 waves within itself. And so you can easily just think to yourself, well, let's just do a trend-based fib time on this, to the high there, to there, to there, yeah, to there, where the impulse begins. There's a bit of resistance right there, you can see. There's resistance there, but these are just fib resistances. I don't know if they're... Yeah, there's liquidity there too, look. You see, because it's above. That liquidity was taken to there, up to there. How is the price going to react at about 10 cents? And really what we need to do is we need to power through. Really, what we need to do is power through that level. It's going to be interesting to see. Yeah, I can't predict the price, but I'm not looking to at the moment take profit because I have these higher targets in mind. Yeah, that's what I'm thinking. I'm thinking I'd like to see the price, if we are now seeing an impulsive move, I'd like to see the price get to those higher targets, and also I'd like to see this fib time and see, really I'm thinking fib time actually. I think it makes sense to wait and see where fib type lands and see where the price lands on fib time. The other thing that I'm thinking to myself is that they're about to launch the new tokenomics document this week. I think it's bullish. I think the new tokenomics document is going to be extremely bullish because it's going to explain to people the value of TRVL in terms of their staking proposals. And if people see that, I think a lot of people are going to be looking to accumulate more TRVL. And because it's a very low liquid market, they're going to probably buy at market. Okay, so I am inclined to just be a little bit more patient even though that there are, like, you can clearly see that there are some resistance lines, okay? You can clearly see that. So if you are looking to trade in the interim, then you could potentially at 10.45 cents or potentially at like 18 cents, you could take profit, because the price could kind of pull back range and then go, you know, you could trade the range if you want at those kind of levels. Those are the levels where I'm contemplating mini ranges to form. I'm not really kind of crazy about this higher one, to be honest with you, just simply because the 50% mark isn't a fib level, whereas the 382 is. And actually the 382 corresponds with this mini range here. So probably what I'm thinking to myself is maybe this next wave that we're about to experience, maybe we do get back up above this high, consolidate here for a little bit, maybe a week or whatever, for the next kind of push up. So we have our wave one. That's kind of what I'm thinking right now. Without kind of trying to predict the future, I'm thinking we push up now, consolidate above the highs in that little consolidation range from the previous price action, and then push up for the last wave 5 of this wave 5 of this wave 1. Okay. It's a bit confusing. No, sorry. 1, 2, 3. Okay, so we're still in the higher time frame, wave 1. This was our wave 1 of 1. This was our wave 2 of 2. We're in a wave 3 now. And then this is the one, the one of the 3 of the, it gets really complicated. But basically what I'm saying is that every impulsive wave has 5 waves and you can just break it down, and it just goes down in the lower time frames. So if this is the wave 1 on the higher time frame, we're in the wave 1 on the higher time frame. So let me just kind of simplify this so people kind of can see what I'm thinking. Let me just get rid of these. I'll keep that rectangle. I like that. This trend-based fib, I'll keep that too. All right, so this is what I'm kind of imagining, just so people can understand what I'm imagining now. Right? And then I'll get rid of the fib time. No, actually, yeah, I'll get rid of it. That's fine, because I can remember that. Just to minimize the number of lines on my chart. So on the higher time frame, I'm still thinking this. Where is that? I have to change that. Okay, that's fine. But I do like the Elliott wave that I drew there. Here. That's where it started. That's the 0. And I'm thinking to myself, yeah, that's interesting. Hold on a sec, I'm just thinking. Let's get rid of this. It's good I had this Wyckoff analysis too, huh? Because I can see where I marked out. I think it'll be nice to go push up as far as possible, just to take the liquidity, but probably end up back down here into this LPS, which would be our last point of support. Yeah, probably somewhere down here into the last point of support. The last point of support. So this one, I don't know how far it's going to get, and an extended push is going to potentially take us to the golden pocket. Yeah, and no one can predict how far the price is going to go up. Okay, but obviously on the trend-based fib, the overextended move is at about 2.26 cents. And then if it's just a normal extension, you're probably somewhere in between 18 cents and 21 cents. But this cold blue zone that I've created is trapped liquidity from a couple of years ago. You just have to bear that in mind. So it is possible. What I really want to see happen is for the price to get into there to clear the liquidity. That's really what I want to see. But no one can predict how the price is going to behave at the highs. Okay, no one can predict that. And you're kind of expecting that to happen really quickly. Now, the wave one doesn't have to end in the highs, but they might. I think we probably will see a major pivot put on fib time, which is going to happen in a couple of weeks. So let's just put that there for the sake of argument, right there, right up into the 618 at about 29 cents. Let's just say for the sake of argument, that's that. And potentially here, let's get fib time back up. Potentially we have a really long drawn out consolidation to there. And I don't know, because I've marked that off as SOS. Probably that's the SOS there. And what I'm thinking is maybe if we do manage to impulse up, take the liquidity, and then form a long extended flat correction down here at the last point of support. I don't know how it's going to form. Okay. And because it's a very illiquid token, if we could just push up, and it could just be like a crazy whatever, just whatever, just it could be quite volatile. So potentially there's going to be a really large range formed here of people buying and selling, buying and selling, buying and selling, and it'll be quite volatile. It'll be very nice, very profitable to trade potentially, but effectively what you want is you want this 382 to hold as support. Once you flip that into support, you want that 382 to hold as support. It's going to be underneath this previous high, so technically it could be it could look bearish, but it doesn't really matter, because what we really want to do is we want to flip this higher time frame fib level into a support level, and that will be at 10 cents, 10.5 cents. And we also have the launch price, which is at 9 cents. And so for me, 9 cents is the absolute last point of support, the absolute last point. So even if we do consolidate over a long period of time and fake out down to 9 cents, I really want to see 9 cents hold. So let's just imagine this, we impulse up, take the liquidity, kind of maybe go up and then start correcting. And if you go down, push, and that's your last, like that's you get a rejection there, and then this kind of finally somewhere on that 1.618 we get our next impulse, and that'll be your sign of strength. And then we're pushing up. So I'm not making, I don't know if this is gonna, like, I'm just like imagining, and then that would take us, if that was, and depending on where the one comes, then you can still do the same thing. You can do a trend-based fib from here to here, depending on where it ends, to where the 2 basically is. And then you can have your targets for your extension. And then if you have an extended run, $4. That's kind of what I'm thinking. And then the 5 could just be whatever. Like, I think most people are going to be taking the significant portion of their profit out of the 3, the final wave 3, because that's the big impulse. And yeah, so because I've got these fib times, that 4 can, as long as that 4 doesn't come down underneath the 1, then that's correct. And it could potentially come down all the way where the 1 is, will set the low for the 4. And deep corrections are bullish, but actually flat corrections are more bullish in my mind, because it means the 5 can expand further. Okay, so wherever the 4 comes will determine how the 5 ends. And potentially, if you get a really deep 4 down to the 1, then you could just get a meh 5. And that meh 5 will be basically probably all back into the golden pocket, from the 3 to the 4, back into the golden pocket for a meh 5, and then down. It's kind of what I'm imagining. So we have to see how that plays out. All right. So I've got some ideas in mind, and we'll just keep an eye on it. Okay. I don't know. Does anyone have any questions? Is anyone still here? No. It looks messy, but I actually think probably if we can get into that golden pocket now, that would be amazing. I'm actually got to keep an eye on this move. And I think for me, the major pivot is going to be on fib time. And then fib time, remember it, this is the weekly, fib time is on the weekly basis. So give or take a week. And then how does that look with our Adam and Eve pattern? Yeah, I mean, it could look quite nice, huh? Adam and Eve. Yeah, the buy up and the last point support, it doesn't actually have to do that. Like, I'm just looking at this. You could, let me just get rid of these lines now, so it's just a little bit clearer. If we were to go up, nah, no. Yeah, if we were to go up now and put a major pivot here, that would be our SOS. And that could just be a big kind of craziness. Could be like a, you could potentially be forming some kind of higher time frame consolidation pattern, maybe like an ABCD E, which would be your corrective over a longer period of time, right into the 1.6.8. And it could be quite volatile. It'd be quite nice to trade, actually, if that was to happen. Up and down and up and down. That'd be really nice. Okay. And I think what's going to happen is that a lot of people who sell will be looking to buy back. Then they'll be looking to sell. Then we look to buy back. Then we look to sell. And that correction will take, potentially, it could take 6 months. That just ranging here for 6 months. And you're basically, you're talking about a 66% range up and down for the next 6 months after we put in a pivot here. And then in November, we're off to the races for the next move. And that will be your wave 3. Okay. If this 4 is a really flat 4 and comes back to backtest the all-time high, then guess what? We're going to $25. Okay. This is something to bear in mind. If we do a really powerful 3 and then the 4 comes back to the all-time high and we backtest the all-time high as support, then there's no reason why we can't power through to $23, which is my overextended target. Or $9, or even just $5. Like there are some levels there, but in price discovery, there's no volume, so yeah, so it could really go up really fast. And if retail get involved because of Bitcoin mania, who knows? You know, like you just can't predict the future. Just don't know what's going to happen. Like I don't know how many people expected this, because everyone's been so depressed because the price has just been a stable coin for the last few months. But you know, I just want to see more volume. Okay, that's really important. And once we get past 9 cents, 10 cents, that's it really. We should be able to just, if people are taking profit at the higher numbers, just try and defend those levels. This 382, maybe slightly lower at 9 cents. There's a couple of arbitrary levels here. I think 9 cents should be the last point of support really. It will fake out a lot of people because it'll be underneath the 382, but potentially there's an area there where we want it, where we need to defend as bulls. We need to defend this area here. Okay, if anyone is taking profit or making that money from other coins, then this is the zone to buy back in if we do extend up into that sell zone and back into this buy zone, sell zone, buy zone. And this could be ranging, and then potentially we'll be looking at, you know, this Adam and Eve bottom pattern and a Wyckoff. All right, that's it. I think that's it. I think everyone's clear now. Dan's clear. I think so Dan is asking, so potential top at around 4.5, that would correspond to approximately 200x from the bottom. Isn't that somewhat conservative? Yeah, I try to be as conservative as possible, Dan. I'm not trying to like be crazy. I think as far as fib extensions is concerned, it will be about $5.1, but I can't tell you that we're going to get there in the wave 3 or the, you know, but I think the next, if we break the all-time high, then for me the next target is $5.1, not 4.8. It's like 5.1. And the reason why I say that is because if you do a fib extension, you see 5.1, and then the next extended target is 9.6, and then you have $23. So you have this whole area here is actually a bit of a range. Okay, and the price could easily distribute. You could get a distribution in that area, or because we're in price discovery, the price could just power through. And I think $23.50 is just crazy overextended. If for some miracle, by some miracle, you get to $23 in this bull run, just sell everything. Just sell everything. You know, that's life-changing money. You would, wouldn't you? But I don't know how much people are going to have left. That's the thing. Like, because you people will be taking profit lower down, so you'll have a little runner on your position just in case we do push up to $23. Yeah, and that's, you can't be upset about that. You can't be thinking, oh, only if I would have held or hodled or whatever. No one can predict the future. No one knows if this is going to go to the higher numbers. No one knows. Okay, and a large portion of what I'm imagining has got to do with Bitcoin, what Bitcoin does. But I think the first extended target for me, and actually I don't really think we should have a problem getting to $5. I really don't. The reason why is because this, you see this down move here, it was very fast and there was no volume. Look, the volume is low. It was a decreasing volume down move, and there's no resistance levels created in this down move. Even this higher level here at about $1.45 is an arbitrary level because there's really no volume in that down move. There's no volume, and a large amount of the liquidity from this down move here, you see these green candles here, has already been taken by these candles here. So the only candles that we have trapped liquidity are the ones that I mentioned in this zone here, somewhere around there. We have a little bit of trapped liquidity, and that's just in this. This is a green candle here, but actually it's a red candle on a lower time frame. There's some trapped liquidity here that needs to be cleared. Once you clear this trapped liquidity, basically above that wick, I think it should fly. And I actually don't think the all-time high is going to offer much resistance. I really don't. I don't think so. I think people from lower down will take profit at the all-time high, but I don't think it's going to offer much resistance. I think we'll probably end up powering through the all-time high, probably. Just bear that in mind. And then the other thing I have is, what else do I have? I've got this channel somewhere. Let me have a look. Let me see this GAN fan. And it's interesting. So we're coming back into the scan. This is that was a touch. That was a touch. And this is, we're coming back into it again. Okay. So hopefully that will clear. And as you can see on this fib time, the GAN is actually coming in about 16 or 17 cents. I really want us to take liquidity as much as possible. Okay. I can't predict how that's going to be. The GAN can offer resistance. Just bear that in mind. What else have I got? Where's that channel? Is it here? Alright, it doesn't matter. I'll draw it again quickly. So the other channel that I was imagining, let me get rid of, let me just clear this data a bit so it's a little less. What's the horizontal level? Okay, let me see. Create a group. One. No, it's not wave one. Wave two. That's gone. Put that there. Put that there. Let me just now hide the trend-based fib and this fib retracement. That's my comment. Right. So we're back to a clean drawing now. Get rid of this volume area. Right. So the other channel that I was thinking about was this one. Let me show you. So there. And let me put this so this is the thing. Could we do that? Kind of, it doesn't, it's, you can't really trade these channels, but there is something going on here. Okay. And look, that would put our 3 right into the top of that channel here as well. Who knows how this 5 is going to be? No one can predict that. That would, and the current price action, that's at about 20 cents. And so that's kind of coming into just the zone that I'm thinking about where there's trapped liquidity is just above that channel. Okay. And so And this is the thing, the golden pocket is above. And so really, if we can get into the golden pocket, take the liquidity, that would be really nice to see. But potentially that channel will, you know, if the price does go up, it could just, you know, it could just do what it did here when you lost it and then it just came back. You could have the same kind of behavior around, in and around this channel. And then later on in the future, when you have an SOS, you are getting back into that channel and then it would look really good. Right? This is something I'm keeping an eye on. These channels are very subjective too. Is that really, is that to there, or, I mean, very subjective, I don't know. Is that to there? Is that to there? Could that be right? Let me do it like that. Have a look. Is that the right channel? It does look better because you do have a test here and a test here. So could we actually now just go into the top of the channel, into that kind of liquidity area that I was talking about, at about 25 cents? I bring that wave 2 in. That's where the zone is. Let me just bring it. Where is it? It's there. And then where is the the 618, the 1.618? Maybe we front run the golden pocket, come into the top of the, maybe this is the right channel. You see, the thing about channels is they're really subjective, but maybe this is better because it allows us to see us come into that zone where there's liquidity, into the 1.618 at the 226 mark, and we just front run the golden pocket. It's possible. Front run the golden pocket. And I think the best strategy, if we do manage to get there in the next couple of weeks, is to just put like lots of limit orders. Yeah, don't even think about, like, I don't really want people to market out. I want people, if they can, to just put limit orders, and then the price will just get where it gets, you know, like it'll go and it will go as much as it can, and then it will start turning naturally. And then we don't all influence the price to because everyone's market selling. You're just going to reduce your own portfolio value when you do that. So ideally what people need to do is to put limit orders, small limit orders, and just scale out on limit. Okay, and whatever the price momentum and the volume of the price, it will just take it up naturally, and then it will round top or something in that area. Otherwise we're going to see some kind of ugly zigzags or whatever, right? That would be nice. I think that's TRVL. Let me just have a look at quickly at a look at BTC. Sorry, it's been a long update. Okay, so on the BTC chart, this is very nice. We're powering up. And actually what I've got on the BTC chart, again, this is the KuCoin chart, is I've got this higher time frame fib. We're above the 236 now. You see that? That's nice. And potentially we're going to come into the value area high at 50%. We have to see how far we get. Potentially, we could be, there is, like, you see that there's liquidity here, there's trapped liquidity here, but it was taken in this push up. You see this push up? That cleared all of the liquidity in this down move. Yeah. And so actually, potentially, this is incorrect. Potentially, what we're going to see now, because we've cleared all that liquidity, the next kind of real resistance is going to be above that wick. And the thing to bear in mind, again, this is what I said before, this down move was quite fast. So if we are going to make our way up here, it is possible that we move up fast too, and no one can predict how that happens. But to do that, you're definitely going to have to flip the value area high into support at this 50% mark. No one can predict that. Could the price range here first? Yes. There are some ranges here in the past. We have cleared the liquidity, but it may still offer resistance because that was quite a fast move up. Maybe it needs to consolidate before it kind of pushes up. And also we've got the golden pocket. I don't know if the golden pocket is going to act as much as give much support, resistance, just because this down move was quite fast. There's something to bear in mind. And potentially you could really shoot up if we get a little bit of an impulse. We could be going right back up to the all-time high. That would be really nice. That would be really easy to see it, to take profit as well, because all you need to do is the same as here, is get a little SFP and you can just take profit. All right, and then maybe we are creating an inverse head and shoulders. All right, any questions? If there are no questions, I think I'm going to end the stream today, and then it's been late, and then I'm going to see you guys potentially not tomorrow, actually, because I'm flying to Berlin tomorrow. I might do a little update later on when I get into Berlin, but I'm going to this conference in Berlin, this short stay conference this week, with my Dtravel hat on. I'm going to go and check out Cynthia. She's talking, I think, on Wednesday or something like that. I'll do some like videos from the conference, all right? And I can post that on this channel. All right, Dan and everyone else, B, David, John Paolo Ruello, Warchild, and everyone else who's watching. If you do like this, I appreciate that. All right, and then we can just get the word out, get more people interested in TRVL. That's it.